Good morning, this is Michael with backtothefuturetrading.com. I wanted to spend a few moments with you going over a trade setup that I teach new traders who are using our software for the first time, and just wanted to show you the importance of a rules-based entry system. And before we do that, just want to cover this real quick. Please take some time over the next few moments to pause the video, read through the required government risk disclaimers. Keep in mind that you should not trade with money you cannot afford to lose. Hypothetical or simulated performance results have certain limitations. Please familiarize yourself with those limitations. Also keep in mind that we do not represent ourselves or hold ourselves out to be commodity trading advisors. That is to say, we're not professing to be a licensed investment advisor. So you should only consider specific investment advice from professional advisors who are licensed to provide that information to you. All information included in this video is for research and educational purposes only, and your viewing of this video from this point forward is an acceptance of these disclaimers and terms. So again, go back, pause the video, read through those, and make sure you familiarize yourself with those risks and disclaimers associated with trading. So I have a video that I'm going to link in the disclaimer to, and it's called the caveman trade. And one of the reasons why I call it the caveman trade is I wanted it to be simple, and I wanted it to harness some of the aspects that I know customers who were successful were employing. And some of those methods, and this can be applied universally to a broad range of indicators and entries. Number one, we wanted to teach people to trade with the trend. So I wanted people to look for trend entries. And in our videos, we are utilizing a 120 period exponential moving average. You can use whichever one aligns with or suits your personality type. Number two, we wanted to promote the idea of pullbacks with the trend. Many of the customers that I've met and traders that I've spoken to, as I try to learn to be a better trader and developer, confess looking for pullbacks in the direction of the trend and not so much breakouts. It seems that most of the people making money in the market are pullback traders with trend. Number three, I wanted my risk-reward ratio to be better than 1-to-1. And so in the video, we strive for people to have minimally a 1.5-to-1 or a 2-to-1 on their exits. And that leads me to my fourth piece of advice that we utilize in the caveman entry. I want to have a break-even strategy. That is to say, when we get to a certain amount of profit, we move our stop to break even +1. We don't let winners turn into losers. And so these are the kinds of methodologies that I've observed over the years that successful traders seem to be employing or deploying more often than not. Sort of a trend entry, pullbacks, a healthy risk-reward ratio or profit factor, and a break-even condition that helps them lock up profits and know when to lock the trade down. And so I'm going to link to that video in the description so you can follow it. But I want to bring you through a week's worth of 5 days worth of signals, just utilizing the caveman methods that I teach in that video. So if you want to pause this video, go to the description and then look at the entry and exit rules. It might explain a little bit more about what you're about to see. So this week defines the 17th of July 2017 through the 21st of July 2017 on the CL019 contract. The time cycles that I'm monitoring, the histograms that I'm watching, are using a stochastic filter with a 5-period D, 7-period K for those of you who are customers at home. I am using a 120 period EMA. So essentially, I'm looking at times that we've been waiting for in the future that are based on past behavioral moves. So that means every one of these signals up top, I'm waiting minutes and hours for. I'm not wondering when the signal will come. I know when the next signal is coming, and so you had time to prepare and be ready for that. And so for today on Monday, we had a, and you'll hear me refer to these as a matrix entry. There was a pullback entry here at 921, good for 10 ticks, with a 5-tick reward and a 10-tick target. Okay. We had a counter trend matrix entry, and I haven't really explored those yet in terms of understanding if they're profitable or not, but this was definitely a signal with trend. We had a traditional signal with trend at 901 right at the open for crude, and it took out our stop for a -7. So that means from the close of this candle to the stop 1 tick above the dot was 7 ticks for a loss. Now we come to a matrix entry at 923. We'd be waiting for it to pull back to the dot, which it never does. And then at 931, just before the US Open, or just after rather, we have a crossover entry. So here the software is warning us that the banks might be pushing the market higher, but I can't do anything till the bar is over my 120 EMA, and that's just a rule that I follow. And so in that case, we had a 5-tick risk, because your stop is just below the candle, and a 10-tick target. We have a signal with trend at 952. The banks don't follow through with that. I believe there was an econ right around 10 o'clock and people were exiting the market. Take that for a 7-tick loss. The next trade here, we had a 10:05 signal. It was a signal with trend, but the very next bar was an inversion warning. And so I closed that with a 1-tick loss. We have another one of these signals with trend. It's a counter trend color with a trend warning, and just like we saw over here at 846, that time produces the move that we were waiting for. So I'm wondering if matrix signals that are counter trend in color are profitable as well. I may have to do a video on that in the coming future. And then you can see that throughout the rest of the afternoon, morning rather, until 12 o'clock, we just had a series of stop outs on this day, which was very hard in a trend model to kind of capture. Entering here with a stop just above the dot takes us out. Entering here with a stop just above the cross candle takes us out. Entering here with a stop just below the dot takes us out. A pullback matrix trade in the direction of the trend takes us out. And then finally, the signal here just before lunchtime takes us out. So all in all, 2 winners at +10, and then a loser, 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 loser. Not the best days on the Monday. Now, I'm going to walk you through the next day real quick, and then I want to show you the results at the end of the week. So here's the following day, which would have been the 18th, or a Tuesday. And on the Tuesday, we had a much different day. After our 8 o'clock window opens, we have a 5-tick risk with a 10-tick reward, a signal with trend. 8:21, the forecast was for the market to fall until 8:42, and it does. We have another 5-tick risk and 10-tick reward. We have another signal at 8:53 that we've been waiting 5 days for, and at 8:53 with a 5-tick risk, it takes us up into a 10-tick reward. Here's the first place where we see the trend start to destabilize. At 9:14, we see the signal has a 5-tick risk, and we come down and we take out that stop. Perfect entry, perfect exit, small stop. Now, at 9:32, we have a signal with trend, but it's one of those matrix entries. And so in that case, we have a pullback. When you have a matrix entry or a pattern 4 lower low, you're waiting for a pullback to the dot with your original risk above you. Now once you know your risk, you know your reward. It was 7 ticks of open risk, which meant a downside target of 14. We get to 10 o'clock here. The market is trending today. Notice the moves are much more open and trend friendly as opposed to Monday, which was much more condensed and congested. At 10 o'clock, the risk is 5 ticks, your stop being above the dot, and it takes us immediately down into our 10-tick target. At 10:09, our risk is 6 ticks from the close of the candle to 1 tick above, and that takes us immediately down to our 12-tick target. At 10:29, we have the first signs of a potential trend reversal with this stop out. So the sellers had an opportunity to push market down. They go into a double bottom and move right back up into our stop, which is 5 ticks of risk. So again, what I really like about this is your winners are always bigger than your losers. 11 o'clock, we have a signal with trend right at the EMA, a 5-tick risk. Once you know that risk leads to a 10-tick reward. We have a pullback matrix entry that has 6 ticks of risk. That leads to 12 ticks of reward. And then the last 2 signals of the day, a straight signal with trend leads to a 6-tick stop out. And then right here at 11:45, we have another signal with trend that takes us down into a 12-tick winner. So much different day, much more friendly to a trend trading system. And what's surprising for most people is that the banks are following these times when we arrive there in the present. So these histograms were on our chart before there were any bars above it. And as we're moving forward in time, we're seeing the banks execute the plan that we've been waiting for. And that leads to profits inside of the constraint of a mechanical rules-based system. Now, that was for a Tuesday. And then we're going to look at, and just show you really quick, we have the same signals for Wednesday, the crude inventory report day. Plus 16, minus 5, plus 10, minus 9, plus 10, plus 10, plus 12, plus 14, minus 5, minus 6 for that Wednesday, 8 o'clock to 12 o'clock window. I remember this day because it was one of my live classes with the customers, and we followed those signals as they were taking place. Then we had Thursday's market in CL, again, all using the same setups, the same window here. Tuesday, much more like Monday, or Thursday rather, much more like Monday of this week. We had a plus 14, minus 5, plus 10, minus 5, plus 1, minus 8, minus 6, minus 5, minus 8, plus 10, minus plus 1 rather, and a minus 5. So the trend signals, when they occurred, we were able to catch them, but because the system has a very fixed risk reward per contract, there are no runners in play here, so no way for me to take advantage of that big move. Finally, on Friday, again, following the same caveman rules, no curve fitting, no discretion, I guess is the word I want to use. Plus 10, minus 5, plus 10, minus 5, minus 5, plus 10, plus 1, plus 15, minus 5, minus 7, minus 6. Okay, so what does that look like at the end of a week? Well, when I punch all those numbers into an Excel sheet and then I start to add them up, at the beginning of the week there was nothing, and then at the end of the week we finish with a hypothetical net, and this is all hypothetical, of 116 ticks. And so when we look at this chart, you start to see that there are a few concepts that kind of don't make sense, because all of these signals were based on times that were predicted 5 days before the move occurred. And so one starts to wonder, how is that even possible to have an equity curve that looks like this if the signals are based on predicted times. And there's a lot of controversy depending on who you talk to. There are some people who believe the markets are fair and the banks are just randomly moving through the markets with all of us trying to make sense of it. And then there are people like our customers who say, markets aren't fair, the banks are running this whole show. And they push when they want to push, they don't push when they don't want to push, and I want to trade when they want to trade. And so it appears on the surface after 5 days, and there's, 64, there's 54 trades, so about 10 trades a day, 3 hours, 4 hours a day, that's 2.5 trades an hour. No commissions taken out or slippage or any of that stuff accounted for, but it seems that there's an opportunity for someone who wants to follow a rules-based system and know when the signals are coming up in advance. There seems to be an answer to that. And so, at the very least, this provides a starting point for people that are using our software that, again, employs those concepts of trading in the entry of the trading a directional trade in the direction of a trend, employing healthy profit factors, risk-reward ratios, employing patience, waiting for times. You know that there are only so many times of the session you can trade, so there's no temptation to overtrade. Having a known stop loss, a known max risk, a known minimum risk, 5 to 10 ticks, no more, no less. A break-even strategy that you can deploy to make sure winners don't turn into losers. These are all elements of a trading system that I think people should, at the very least, investigate when they're starting to learn how to trade. Thank you for your time today. If you want to know more information about our company and watch one of our live webinars, there will be links in the description below. Please don't forget to subscribe and comment. We provide new information. Our goal is to reveal this information to as many traders as possible so that they know what the banks are up to and can prepare for that. So have a great week, everyone. We'll see you on Monday. Remember, the market you trade is not random. You can use tools like the Flux Professional and Investor software to know out into the future when to research for higher probability trade setups. Thanks again. Have a great week.